Hi everyone, this is Dawid about from ABM Tax. Today we're going to speak about budgeting in the trucking industry. From our experience with our trucking clients, 2023 has been a tough year for most, and 2024 is upon us. The first 6 months is expected to be a tough period, and we expect things hopefully to let off by mid Q3 2024. However, one thing that we realize that most of the people should slow down for a second around the holiday season and start making a budget. No matter how small business you are, even if it's an owner of one truck, you need to sit down with yourself, come up with lists of expenses. So there is some pointers we can help you. You always know if you're an owner operator and you're running with a big company, you kind of know what you're making every month, and then from there you can set percentages of what your fuel would be as a percent of your revenue, as well as like your other running costs, like repairs and stuff. But then you have your fixed cost, which is basically like the stuff that how much you're paying per month per truck for that truck if it's not paid off, or wherever other expenses, if you have insurance, if you have your own plates or your own authority. Now, understanding those overhead costs will always help you to understand how much you need to run to break even. A lot often than not, people always look at the top line. And if your top line is you are making the miles, but you're not paying attention to your expenses ratios, you always not gonna be able to cover your overhead, and you actually end up cutting into other expenses or other remittances or other commitments. So a classic example we find with a lot of owners, they never really pay attention to the revenue, fuel to revenue expense ratio, which is very important in our experience because that's kind of like your where you're gonna get to understand your gross margin. And the second aspect to that, if you have a co-driver or if you have one or two trucks, you have to understand how much your labor costs, and you have to set a percentage as your budget point because those have to be fixed as a percentage. They can go 1 or 2% one way or the other, but they cannot go off. So understanding those percentages of your running costs of your revenue will kind of give you a good sense about how much money, free cash flow you're going to generate from your monthly income. Then from there, you have to account for your fixed costs. Understanding your cash flow is very important in trucking, and I hope to make more videos to explain this further. And thank you for viewing this video.